Hey everybody, Chuck Barone here. It is Wednesday, April the 10th, the day we knew was going to happen this week. It's CPI day. And did you guys see what happened? Holy crap, these markets went crazy today. Exactly what I was telling you guys could happen, did happen. I got to admit, I'm happy to be right about it, but I'm not so happy for the results because it was a bloodbath today. Before I get started, though, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys being here. All you newbies who came over from Greg's channel, welcome. It's good to have you guys here. My show is a little different than Greg's. I don't have a lot, I don't do some of the zany stuff that he does, but I give you straight, real information that's practical and useful if you're actually investing and trying to put money together, for your retirement or for whatever. Anyway, let's talk about these markets today. Crazy, crazy, crazy day. Did you see what happened? I mean, as bad as the stock market was, which gets all the attention on TV, did you see what happened in the bond market today? Oh, man. A very, very, very bad day in the bond market. Let's talk about all this. So, the stock market obviously has a big tantrum. The CPI number coming in just super hot, guys, telling us right we I've been saying it all along, they're not going to get as many cuts in as they've been talking about. Now we can certainly print that they're not going to get them. And I got some statistics coming up here a little bit later, but basically the June cut, the market now factoring in a 0% chance of a June cut. Now we move into election season. I'm telling you guys, if we get one cut this year, we're going to be lucky. And I don't know how much 1/4 point cut is going to do as far as, making the economy really rock and roll again. I just don't see that. So the stock markets today, horrible day across the board. The Dow falls 422 points, sitting at 38,461. The NASDAQ falls 136 points to 16,160 on the NASDAQ. The S&P falls 49 points, 5,160. No more records for these stock markets, guys. Just not going to happen. The party's over. I think this rally has run its course now. The reality of higher rates for longer. This market's been driven. Earnings have been okay. But the market's been driven by the idea of all these rate cuts coming this year. Everybody knows that rate cuts are stimulating for the economy. Easier to borrow money. Obviously, people do it. Cheaper to borrow money. People do it. So they were anticipating this big rush toward the end of the year. Guess what? Not going to happen. Stocks are going to adjust accordingly, guys. Bond market. Oh my God, this was ugly today. So bonds obviously selling off, yields rising like crazy. Listen to this, guys. The 10-year rises 19 basis points. That's bananas. The 10-year now sitting at 4.56%. The 2-year jumps 22 basis points. That is, I've never seen that. I got to say, that's a new one for me in all my years of watching these markets. The 2-year now sitting at 4.97%. I was telling you guys it's going to push 5%, probably go over 5% and stay there. It's just going to be fascinating. Wouldn't that be strange? Because you have the Fed funds rate, which is the overnight rate, at 5.35%. Wouldn't it be something if the 2-year actually got higher than that and kind of reinverted the yield curve a little bit? Crazy, crazy times in this bond market. I'm glad I'm not a bond trader because they got to be hating life right now. Yield jumps this much. You just don't, a 10 basis point jump is humongous in the bond market. 22 basis points. Oh dear. I've never seen anything like it. So the bond market has been a bloodbath for a long time, just continuing to be ugly, ugly, ugly in the bond market. The dollar today, wow, the dollar rallies up. Rate cuts make the dollar a little bit weaker. Obviously, this idea of no rate cuts taking form now. The dollar jumps 108 basis points on the index, now sitting at 105.17. Super strong number for the dollar. I was telling you guys that was going to come too. So here we see it well over 105 and likely to stay there. Precious metals take a breather today. Surprisingly, a stronger dollar, though, going to put pressure on gold and silver, and it did today. Gold falls $19.20, sitting today $2,334. Silver falls just 22 cents, now sitting at $28 even. Still very good, strong numbers for gold and silver. Honestly, it could have been much worse in the market today had, looking at the way the dollar rallied up. But gold and silver are still holding their own. And as I've been telling you guys, this rally on gold and silver is just starting. Get ready, guys, for a rocket ride. It's going to keep going up. Oil today rallies up 98 cents, sitting at $86.21. As I've been telling you guys, this is not a supply-demand thing with oil. This is a Middle East thing. Today I was reading an article. They're saying an attack by Iran by drone or missile is imminent on Israel. Now, if that actually happens, we might have to listen to our friend Salente and believe World War III might actually be happening right now. Crazy stuff, guys. If Iran actually launches missiles at Israel, all bets are off on stocks and bonds. It could be making this inflation story look just like chicken feed. Bitcoin today rallies up $787, now sitting 69,762, still a good strong number for Bitcoin. Tons of positive mainstream press about Bitcoin and the ETFs, how they're working. Go Bitcoin. I mean, I think that as long as these ETFs stay hot, and they are sizzling hot right now, Bitcoin's still going to keep going up. All right, so let's talk about these CPI numbers today. This was the shocker. I was up this morning. Believe it or not, I got up before my alarm. I was up at 4:45. I was so excited to see these numbers because I just had a feeling, as I've been telling you guys on the show, that this number might come in a little bit hotter than they were hoping, and it did. Comes in year over year, top line CPI, 3.5%. That's up from 3.2 last month. They were expecting it to be up, but only up to 3.4, so it clicked up another one higher. Guys, I tell you right now, this is the final nail in the coffin of this rate cut party. They've been talking about, in December, when we were moving into the new year, they were talking about 7 rate cuts. Then it got cut to 5. Then it got cut to 3. Now they're talking about 2 or maybe 1. But I tell you guys, unless the economy goes into the tank, we're not going to get rate cuts this year. The Fed needs a reason to cut rates other than people want them to. That's not a reason the Fed usually cuts rates, although it did work when Trump was complaining about it. But I don't know if Biden's got that kind of clout. So the number's sizzling hot. And the market already immediately went to work on it. You saw what happened in the bond market today. Now pricing in, they had expected rate cuts starting in June. That now has a 0% market probability. Now they're moving towards September. The core number was even worse on the top line number, coming in at 3.8%. That's up from 3.5% last month. Again, they were expecting it to be higher. They were expecting 3.7. Another click higher. So now, stock market has to come to reality, guys, that this inflation fight, as I've been telling you guys the whole time we've been doing this inflation thing, it just doesn't go away real quick and real easy. It just doesn't. Now, I'm not trying to claim I'm some real smart guy. I'm just old. And I've lived through the last inflation. I saw what happened and how long it took them, literally more than a decade to beat it. And the big lesson they learned was you can't cut rates too quickly. So the Fed's being patient. And now with numbers like this coming up, the party's over, man. The rate cut fantasy is going away. 0% chance in June. They're saying only a 6% chance that they'll be cutting rates rates this year by 100 basis points. That's 4 quarter point cuts. They're not expecting that at all. Now that's pretty much down to zero. Okay. And this is the third consecutive month in a row that inflation numbers have come in hotter. They were expecting them to be up, still came in hotter than even they expected. It's really going to, I can't wait to see how they're going to try to spin this somehow into good news. What they want to do is point to, well, it was 9.1%. Yeah, for 1 month, and it came down pretty quickly from there. This now heading back toward 4%. Well, that's not so great. They get to 4%, it's double their target. You could possibly see a rate hike this year, right? Bananas, guys, bananas. You see this new inflation measure? I was laughing reading about this. So you have regular top line inflation, you have core inflation. Now they're adding on what they call super core inflation. Now what they do is top line basically includes everything. Cost to shelter, food and energy, all included. Core strips out food and energy because it feels like they're volatile, they go crazy. They want a more accurate reading of what real inflation is. Super core also takes out not only the cost of food and energy, but also the cost of shelter. So house prices, mortgage rates, rent increases, all that goes away with super core. But listen to this, guys. The super core number came up 4.8% today. That's the number year over year, 4.8%. They're blaming it on property taxes going up like crazy, insurance, car insurance, home insurance. You saw what happened in Pacific Palisades. 70% of the people that have homeowners insurance in Pacific Palisades, which is a beautiful, fancy, super rich area near Westwood in California, sunset in the Pacific Ocean, all getting their policies canceled because it's considered too concentrated a fire hazard. So insurance rates climbing, especially in areas like Florida, California, Texas, where they get affected by fires, hurricanes, and stuff like that. Guys, 4.8% is probably more like the real inflation number. At least that's what it feels like. I still go to the grocery store and pull my hair out when I see the prices on everything. It's just bananas. Gold, our good friends gold, rocking and rolling, man. You guys have seen the numbers, even though it was down a little bit today. Listen to this, guys. I'm not sure if you know, I was joking around saying Costco is now selling the weight loss shot Ozempic, right? Did you guys know they're also selling gold ingots there? Yeah, they're selling 1 ounce gold bars. Listen to this. Costco is selling $200 million worth of gold a month. Why Costco? That is bananas, man. Holy crap. I would think, how many people are going to spend $2,000, $2,300 on an ounce of gold? $200 million per month. Crazy. The Fed balance sheet, I'm going to touch base on this. You guys have seen, they talked about QE where they bought up $5 trillion frickin' dollars worth of bonds. Well, now they've been doing this QT, quantitative tightening. What they've been doing is letting, as the bonds mature, just not buying new bonds with that money. They've been doing it to the tune of $95 billion a month. And they've actually reduced the Fed balance sheet. I know you guys aren't big fans of the Fed. Neither am I. But they have managed to reduce the balance sheet from $9 trillion down to $7.5 trillion, which is still a staggering, crazy number. But now they're afraid that that's a real tightening thing. That's the biggest drop in M2 since the Great Depression, man. Now they're tapering the QT from $95 billion a month down to $65 billion a month. So they're going to loosen that up a little bit, not take as much cash out of circulation, right? So let's see. Oh, have you seen this? More and more Fed big shots talking. You had the guy from Atlanta, a couple other people, plus a ton of economists now talking about zero rate cuts this year. I've been warning you guys since before the year started that it was unlikely we were going to get the scenario they've been painting for us. I explained a million times why. Inflation is tough to get rid of. The last mile is the hardest mile. And just because everybody wants the Fed to cut rates doesn't mean they're going to. I've been warning you guys about this stuff and telling you now. Well, guess what? Now it looks like it's coming to fruition. Now get ready, guys. Tomorrow is going to be another big day. Tomorrow we're going to get PPI numbers, which is the producer price index. That's the wholesale level, right? Plus we're going to get job, unemployment numbers tomorrow. So we'll see how hot that comes in. Tomorrow could be another day just like this one, or it could be the bounce day. If you get bad numbers on PPI numbers, PPI coming down at the wholesale level, and you get a crappy jobs number, boom, market could rally tomorrow. So it's going to be fascinating to see. I'll be up again, cracking before the sun to see what they say about PPI. So tomorrow is going to be a big day, and so will Friday be. Friday, we're going to get the University of Michigan, which talks about consumers, talks about manufacturing, gives us a lot of data about where sentiment is right now. Plus, we're going to get a big day of bank earnings with all the big banks reporting that day. Chase, Citibank, JP, Bank of America, Wells Fargo. So Friday is a big day, but tomorrow is going to be the real big one. And last, before I get off today, I was just reading, I've been talking about how tough it is for working people and how everything's designed to screw working people over. The rich have their people, they get all their tax cuts and big breaks. The poor have their people, they get all their free stuff. Us in the middle, the working schmucks, what do we get? We get the bill for all of it. Anyway, I was just reading 65% of Americans polled. This was a pretty big poll, 5,000 people. 65% of them said they're now living paycheck to paycheck. That's up from 58% last year, which is a record high. More and more people falling through the cracks, having difficulty. Hopefully you guys aren't in that group. We've been talking about what you guys need to do on this show for a long time. Stash as much of every income that comes in, try to save 10% of it. Put together your FU money. Invest your money conservatively. Don't spend your money impulsively. All the very basics of just getting started in financial, start the building wealth. Anyway, I'm going way long today, guys. I appreciate your support. I will be back tomorrow to bring you guys the news you need. As always, I appreciate your support. Please hit the like button, guys. Changes the algorithm around, gets our video in front of a few more people. And we'll be back tomorrow to bring you guys the news you need. I'll be reading all these comments. If there's any good questions on there, I'll be bringing them up tomorrow too, along with your guys' names. And again, we appreciate the support, guys. See you tomorrow.